All right. Good morning, good afternoon, good evening. All depends on when you're watching this video. This is Jevin speaking, the founder of Faro Markets. Before we jump into this video, if you want to follow us and join our public channel, this is the link. I'll also have it in the description. So basically, this coming week we have FOMC coming up, and the three pairs I'm looking at is USD Yen, gold, and NAS 100. Reason being, USD Yen is my base currency. I use that to basically determine the true direction, and from there I use it to basically form what's the word? Fractional disparity. That I'm sure some of you are familiar with that. So from there on, and also gold and NAS, they pay a lot. So some of you would know I made a video about a month ago based on the NFP report. So also, if you want to follow us on Instagram, this is our IG, Faro_markets, and obviously you can follow me here as well, Chicken_Faro. Okay, so last month, about a month ago, I did a video on USD Yen and the NFP report, and this is the update. So basically, I wanted price to come all the way down here before buying because my bias was long, and as you can see, market went all the way to my take profit. Let me just take off these EMAs real quick so I can explain the anomaly behind why market did that. So as I always teach and explain to my students as well, market, like support and resistance, doesn't exist. Market makers trade from the highs and the lows, meaning the high and low of the day, the high and low of the week, the high and low of the month, high and low of the quarter, and also the high and low of the year. So this was April. I covered this in the previous video. Like I said, the link will be in the description. And basically, I determined that this is our level 3 consolidation peak formation low. And basically, okay, I missed my entry, but you know, it happens. And price went all the way up to last month's high. And as you can see, they kind of broke through it and just dropped. Well, obviously, reason being, some retail traders would see this as some type of resistance because price hasn't been in some time. And also, once it gets there, we might see some type of reaction. So as you can see, the first candle that got there, it kind of rejected. Now, here's the thing. Price broke through. So if we had buy stops up there, they probably got activated. As you can see, market just pulled away. So probably the stops were hit. And also you get big institutions who would have sold from here and had stopped us way up here because obviously they would swing it long term, holding trades for months and years. And if they didn't move stops to entry point, market makers came way up there again and smacked them. So technically speaking, this is a massive information, and obviously this move was expected. I'm expecting the yen to basically come down more or less either to this level, more or less to 107.7 or 106.5. Okay, so remember, very important tip: market makers make fake moves beginning of day, beginning of day, end of day, beginning of week, end of week, beginning of month, beginning of quarter, end of quarter, beginning of year, end of year, and also beginning of session and end of the session. So as you can see, basically in April we had a fake move moving to the upside, and we had 1, 2, 3 levels of drop forming a low. This is 4 weeks. The yellow lines represent the beginning of a new week. The purple line represents the beginning of a new month. So technically speaking, this was the low of April, became a psychological support and resistance area. And obviously you see price broke through. So now price bounced off support, or price came to support, broke through. Now support has become resistance. So here's the other thing. Some retail traders who use trend lines, they would have followed the wrong directional trend, because technically speaking, price is holding that level, and whoever took this, or if you put it on Wait, let me draw this properly. Let me draw this properly. Okay, so technically speaking, this was kind of like an inducing trend because it makes sense. So notice how basically price rejected. And like I said, when price got here, support has now become resistance. So technically they should keep on selling. And that's why I wanted them to come down, obviously induce retail traders intending to move up with them. But then I realized I miscalculated the move, and what actually happened was what we have over here is a head and shoulder formation. Because I know one of my students caught this move. I think the Sunday Monday when market opened, caught the move to the upside. So this was a nice head and shoulder formation. That makes sense why I kind of went up and didn't come all the way down here. So I also marked this level up over here so you can see if you put this on this line over here on the right shoulder, you'll see how price basically came to that point and rejected again. So your entry could have also been taken over here, NFP more or less, if we entered more or less in London or just before New York. But anyway, why do I know? And also why did I want price to come back down is because technically speaking, we didn't have a cross of the EMAs yet. So when the catch up, which is the red EMA, the 13 EMA crosses the 50 EMA, the water, that's your indication that peak confirmation low is now locked. So that after that, you can expect level 1 consolidation. So technically over here, we were still in level 3 peak confirmation low. So once this move happened, as you can see, we basically have one strong impulse, a second strong impulse, and you have 1, 2, 3 strong impulses. Obviously to induce people to keep on buying, and whoever bought, because some people buy the breakout of the crossover of the EMAs and so forth and so forth. But technically speaking, there's no line chart. This is my level 1 consolidation straightaway trade. And also notice how it makes sense how it pins to the neckline of this of our initial first leg W, because remember we expected this in a macro perspective also to be our first leg. Notice how it pinned that level, rejected, also had 1, 2, 3 bounces, W formation, and rose. Right now over here we see a cross of the 50 EMA crossing the 200 EMA, the water crossing the Mayo. Now that's an indication that you're either in level 2 or level 2 is on the way. Now what makes it interesting is the fact that price was really consolidating. Now remember, it's all psychological. Like I said, you're either in level 2 or level 2 is on the way. So now this indicates I'm in level 2 consolidation. And obviously this over here becomes your stop and low, because obviously, I mean, people, like I said, they buy the crossovers of the EMAs. Strong move to the downside, as you can see, also more or less 1, 2, 3 push impulse to the low, induced, and then we had that rise. And we basically had 1, 2, 3 levels of rise, peak confirmation high. Right, so this becomes our peak confirmation high up here. Whoa. So that's just another gem to add to like a level count, like doing like performing a level count, knowing that what level I'm in now. So I'm just gonna clean this up a little bit. Okay, so Another indication that price was going to rise during the month of May was my open sentiment. The way my first candle opened of the month, opened on a bullish doji or whatever you want to call this. So my sentiment for the month was a buy. Now also let's just use this price level real quick, where price open, and see how price reacted with it whenever price got there. So this is the open of the candle. So see also how price when price got here kind of broke through, rejected, broke through, came back over here, W formation, broke through, kind of rejected. And like I said, this move over here, this stop and low, that was a pretty good indication that you should be looking for buys. So even if you miss this whole move to the upside, which like me, because I trade synthetic indices, crash and boom, range break, and VIX, I will also leave a link in the description for a broker if you don't know to sign up. Like I said, yeah, so this becomes a level, a potential strike zone as well, which also can be kept in mind. So knowing that that's our peak formation high, that was just a simple way. I will go over each week in another video, but for my students, and I'll think about it. Maybe I'll release it to the public. So what's the next potential move on USD yen? Let me just clean up our previous analysis. Okay, so I'm not gonna do like analysis according to the boxes. I'm gonna use some retail. I'm gonna show you guys some retail trading. Okay, so knowing that, first things first, we're in a new month. Okay, so everything over here now becomes history. So yesterday's history, tomorrow's a mystery, but today is a gift. That's why it's called the present. Focus on where price is trading right now. Is it at a high or low? And then from there on, you'll be able to determine whether you can strike them. Okay, so first things first, the beginning of the month. This is basically the beginning of the month. It says 31st of May, but that's according to the broker. Obviously, this candle closed at 3 a.m. on the 1st. So technically speaking, I'll make this pink. This candle closed bearish. So technically my sentiment for the month tells me that I should be looking for sells, or price is going to fall. As you can see, I kind of expected that. Now, the reason why I also drew this box is because my students know what this is. This is the weekly structure. Basically, what happens is you mark up the first 2 4-hour candles, and if price breaks to the upside, you look for sells, and if price breaks to the downside, you look for buys, because obviously the breakout is a fake move. Because now think about it, market makers make fake moves beginning of week, end of week, beginning of month, end of month. So beginning of week, beginning of month. Obviously, this is obviously 1, 2, 3 levels of rise. So that's inducement, you know. So initially, I'm looking for a sell. So if I just mark up like this, and then I'm also going to mark up. Now, what makes this interesting is the fact that we basically had 1, 2, 3 bullish candles, and we had a 4th bullish candle. Okay, now price might not go all the way up here, because this might be people who bought thinking this is a breakout and got trapped. So what I would do is I would then mark up the close of the candle, because notice also how the second candle came back and stayed within the wick of the candle, right? So obviously something is happening there. Some type of liquidity is trapped. And also, now this is the beginning of the week, yellow candle. My candle is red, so obviously my sentiment also tells me this. I should be looking for a sell. Now, according to what's happening with the FOMC, I would love to see price be all the way up here before FOMC comes up, because then obviously like it will confirm a nice information and be a strong move to the downside. And if so, let me just make an example real quick. If price is all the way here and FOMC comes and we catch that move, we could potentially either catch 190 pips or either 320 pips or even more, because if price holds this level, this macro M would be even more potent because it's a much more bigger information. So then we could potentially see a move all the way to the zone, which could be 470 pips. Now these are just potential places market might go if this position is held. But according to what's happening in the EMAs, we are in an uptrend. So if price holds this Mayo on Tuesday, Wednesday, Thursday, if price holds this, we could potentially see a move to the upside. So let me just put us on a line chart real quick and show you what a retail trader would see. So technically speaking, I hope you guys can see this. So I'm gonna okay, so see this inducement happening right here. You see what's happening right here? Why I also said this is fake move beginning of month, because technically speaking, think about it, this is a breakout and retest. So some people also went long here, so they went to profit, but if they didn't secure their profit, like bam. And I mean, think about it, how many times did you hold a trade from a Thursday to a Monday and market makers took everything back? You know what I mean? So the next potential, what I would love to see is my next potential, what I would love to see on USD yen is obviously going to be a move to this point, more or less, and then up, and then drop. But then again, I would also love to see them like hold this level. According to let me just see. Okay, so according to my method, if price holds this level, so I'm gonna just make this green so we know we're looking for, this is our strike zone. A potential strike zone, okay, not strike zone. Okay, so if I have 1, 2, 3 candles trading within this candles range overnight, I could potentially see stop and low, and obviously breakout, and then rise and hold this level. And like obviously, if this happens tomorrow, Wednesday, that confirms that they're gonna come back to the high of the week, last month's high, everything will fall into place, and you know. So another thing I also wanted to explain regarding whoa. Also another thing I wanted to explain regarding the candle was you can even use it as an order block. My word, we had a rectangle. You can even use it as an order block. This is what I'm saying. we could potentially see moves all the way down here if that's the case. You know, so there's still a lot of money that could be trapped down here. So a lot of money could be trapped up here. But now the question is, who is trapped down here? Buyers or sellers? So don't trade in the middle of the range. Another thing that could also play a role is, so let me just do some more hygiene real quick. So, okay, I'm just going to put my bias, what I want to see. So it's either I want to see price come all the way up there, or I want to see price bounce off this point, and obviously consolidate and then drop. Okay, it looks ugly, but you get my point. So yeah, like that's what I want to see, but I think this move to the downside, stop and low, is highly potential, because also if they bounce off the open of the month, that could also play a vital role. What else I want to mention now? Oh yes, the Fibonacci. So basically from this high to this low, they usually use 0.50, which is why I say could be vital to induce to sell. They also use a 382, which is vital. Like I said, breakout, retest, bounce off the fib to confirm the buy. All psychological, all psychological. And also, like I said, if they could stop hand low to this point, for example, like to there, that makes more sense, you know. So that's just a few gems as to, like, how market makes trap traders. So if you wanna see, if you have any questions, if you like, please like the video, and also share the video, because if you share the video, that will put me into the algorithm, so I can reach other traders, so they can also learn and beat the market maker. Remember, guys, like, it's not a competition. The market makers and brokers are our enemies. We're in this to make money together, and this is why I'm doing this. I'm doing this for you guys, for the public, for free content, because I'm not even can afford mentorship. So I hope this was very fruitful. Comment down below if you like this, and if you want to see anything else in the next video. Don't forget to like and subscribe, and please follow us. And until next time.